When I show you this 4-hour chart, what do you see? Is it consolidation? Expansion? Why is price moving the way it is? In this series, I'm going to break down every part of the silver bullet from bias, entry, and psychology. Today, I'm going to show you bias and how to determine our direction using the daily, weekly, and time-based sessions. If you don't already know these concepts, check the link in the bio where you can find the ICT for Dummies ebook inside of our Discord education. Now, getting straight into the video, we're going to be focused on the daily time frame first. Now, hopping back from our week, going onto the daily chart. So the first thing I'm going to be looking at is what PD arrays are we respecting, disrespecting, what is our next draw on liquidity, and what is the overall market structure. So now that might seem like a lot, but let me show you. So first, we have this market structure shift below this low. I see what would be a balanced price range up here. And we also have this breaker. Now, if we have this breaker, there's no reason for us to want to trade all the way up here because this is a balanced area. We shifted below not only this low, but this swing point. So looking at our breaker right here, we can see us trade up. Now, initially I told my VIP members that we're going to be looking for a bearish draw down here. This swing low, possibly even this swing low. However, this was my first draw going into this fair value gap. Now, why am I watching this? Well, dollar has been going up. We have some type of bearish sentiment, and market structure indicates that we might go lower. Now, notice how I point out price action. I'm discussing it as if it's a lower time frame chart when we're looking at a daily chart, but time is fractal, so that means price is going to move the same on the higher time frame as it is on the lower time frame, except we have to be much more patient on how our setups are going to form throughout the week. So the reason why I chose this breaker to trade up to before we go to our draw on liquidity is because we could expect a manipulation on Monday, Tuesday, or Wednesday being the high of the week. So right here, I'm looking at a possible classic Tuesday high of week. So what we would want to see is up to us to trade up, find some kind of resistance right here, and then trade lower, creating a market structure shift that would lead us all the way to this low. Now, if we're bearish on the week, we're going to want price to actually trade up, which is going to create accumulation. We're going to manipulate at the top right here, and Tuesday is going to be the high of our week, or sometimes Wednesday will be. And we have to consider Monday has no news, so all we're going to be doing is accumulating, consolidating, creating new lows to target right here, and essentially just manipulating above this high. So even though we're looking at a daily time frame, we're considering this as the weekly draw. So going into each and every session, we're going to be bearish until we meet our target, and then we could reconsider if we're going to continue or not continue. However, this is going to give us purpose, meaning, and we're not just looking for any type of fair value gap. We're looking for specifically a bearish fair value gap where we're going to be positioned well enough to catch a expansion. So now that I taught you daily and weekly targets, I'm going to drop timeframes and actually play out what happened on the week. So going forward, we have a Tuesday high of week. So Monday trades up into our fair value gap. As I told VIP, we find some level of resistance after tagging up above this high and then making one last high above the Monday, making a Tuesday high of week. Now looking at the 15-minute chart, you can see on Tuesday we took out this high, we traded lower. We probably wouldn't have wanted to trade on this day because we had no red folder news, so we're going to focus on Wednesday. So as you can see, we're extremely bearish. When we don't take out Asia, we don't take out London, and we're just constantly moving down, we could expect continuation going into New York. So I've already marked out this fair value gap. So right at the open, we trade up into it and then we trade lower. We have our weekly target down here. Chances are we're not going to be respecting any sort of PD array. So even though what might seem like discount, we're actually going to expect us to continue down below into a deeper discount, targeting our weekly target. And I could sit here and I could show you all the fair value gaps in here, but there's plenty of opportunities and we'll go over entries later. However, I'm just trying to show you how we're developing our bias. And I see many people thinking we're oversold, we're overextended. But if you just look at the weekly target, which was this low, you're going to see we're clearly going to target that low. We're not just going to stop and reverse. You have to know when to continue and when to stop. And right here is when you're looking for continuation. So now looking at the following day, our weekly target was hit and we could reevaluate and see what's our next draw, what's the next possibility. So when we hit our weekly target, there's always the possibility of a TGIF, which is simply a retracement of the weekly expansion. So as we could see right here, we trade down lower from 9:30 to 10, we trade down lower. So we're going to look at this, and we haven't entered any positions yet because we're waiting for 10. So we're going to look at this possibly as a Judah swing, because look at all the resting liquidity we left over. So you can see this high, and this high. And this actually created what is called a market maker buy model, because we have our original consolidation up here, and we're going to trade down. We're going to accumulate lower, and then we're going to distribute higher. Now, I saw many people trying to short this move, thinking we're going to continue. But as I discussed, we already hit our weekly target. We're trading into a bullish PD array right here. There's a good chance we're going to see some sort of retracement. Even if it's not all day, we're simply trading a scalp, which is the silver bullet, right, from 10 to 11. So I guarantee you're going to find some kind of bullish fair value gap to trade up into this liquidity up here. Now I'm going to leave you with one final thought, and that's going to be, what is our weekly target? Where is our next expected daily expansion? So as I showed you, we were bearish the first part of the week. Once we hit our target, we were looking at a possible retracement. And then what is our resting liquidity? How is price going to develop for us where we could actually find and execute on an entry? And throughout this series, I'll be going through risk management, psychology, and how you can develop your trades as a silver bullet trader. If you liked this video, please check out our other educational content and link trees in the bio, where you'll find many resources on how you could become a better trader, what concepts we use, and how we got funded.